On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and joining me as she does every week is the chief strategist at MarketGauge.com and the founder of the Economic Modern Family channel on YouTube, Mish Schneider. Mish, we meet once a week. We have this show once a week, every Thursday at 12 noon, and it seems like every week we have something else that's new to talk about. Right now, we have oil. Now, you've been beating the war drums on oil for a while, no pun intended, of course. But with that, you have been predicting 120 per barrel. Is this a start of where we're going to start talking about 130, maybe even 150 a barrel? Or do you think that we hit peak price at this point?
Well, what was interesting is before we got on, oil was trading, and of course, I'm always looking at the West Texas just to be consistent, but it was trading at around 95. And then all of a sudden, in one full swoop, it rallied up to about 100. And now it's sort of settling here between 98 and 100. So let's go through tranches, right? Because that's really important. I was hoping to see a dip to 88 to $90 a barrel as a new buy opportunity with a much lower risk. And it looked like we were going to head there, and then boom, it didn't happen. I don't even know what the headline was, and it's irrelevant at this point. So if we're just looking at price, and I say irrelevant, I mean you can't trade off headlines. Not that this war or anything about it is irrelevant. I mean trying to trade off of headline is not relevant. We're all about price, and I keep reminding people about that. So here we are at 100. So I guess you could say that if we can clear 100 here, first of all, that does not mean good news. Of course, the 120 is a good target. What would make it go higher than that? I really shudder to think about that, quite honestly, because we really are at this point, all of us are hoping that we get this situation under control. And what we're not having right now is any indication that the situation is under control. Because it's not just about oil, right, Todd? This is what we've been talking about over and over.
Right, right. You're absolutely right. But the question is, and you're right, and I get that, and that's the personal side of it. You're throwing emotion into the oil trade. Everybody wants the war to end. I got that. But we are here to talk to an audience that is interested in how to capitalize on the situation. Whether that's awful or not is not that's not our decision to make. Our decision is to give the information to the audience, and it's up to them whether they want to take advantage of the rise in oil. But when you look at individual equities of the big three companies, you have stocks like Exxon, even a Chevron, they're up 30% year to date. Truly remarkable trading. So, as an oil trader, though, and you are a specialist in this area, do you believe that now are we hitting that peak, or do you think we still have room to grow from here on out?
I don't see any reason to be negative at this point. I think the biggest question, of course, is like I said, I'm always assuming that people that are coming in to listen to our broadcast are either already long, in which case they kind of want to know where should I start looking at some profit taking, or where should I add to the position, or they're not long and they're saying, wow, where should I actually get in at this point if I'm late to the party? And so, yes, if you're looking at something like Exxon right now, I think that we get through the most recent high, which, by the way, was yesterday, yesterday being Wednesday, Tuesday
That's
and Wednesday
right.
had similar highs. And I love to put numbers on things. So essentially at this point right now, if we get through this last high, which was at around 160.50, let's just call it to round off, I don't see any reason why Exxon can't go higher from here. And I like to look at round numbers. So we're looking, let's say, at 200. And the good news is you kind of know right away if you're wrong, because it shouldn't, if that happens, get back down under 157. Keep it tight. This is a great active investor market right now. And then if we go to the oil itself, because I know you want me to give you trading advice, and I thought I was doing that. The emotional side, and forgive me, I know I try not to get emotional, but of course, the emotional side is not so much we're hoping. Of course, we're all hoping, and that's what makes us humans so great, by the way, is
Right.
we live on hope, right? But if we're just looking at it right now, yeah, I mean, we had that one spike close to 115 not too long ago, and this 100 is a good probable areas. So I would say 115, 120 is reasonable without really trying to make a prediction or even trying to make a hope that things cool down by that point. Of course, if we get through that 120, then I would be looking more like at 150. But I'm not going to sit here like many analysts did while I was calling the top in gold, saying gold was going to 6,000, 7,000, 8,000, 10,000, and it didn't happen. And by the way, we talked about that. I said, couldn't get through 5,400. That was my exact number. It's going to sell off. So let's move on because there are other opportunities emerging out of this whole thing.
Well, real quick before we do move on to the opportunities, but and you are right on that. You were been spot on with the gold announcement. You knew exactly, almost like you had a crystal ball. But I see that copper is now at a loss for the year. I mean, and that's asking you to talk about the red metal, but when you look at commodities, you look at these metals, historically, these have always been great places to be during these uncertain geopolitical events. Not happening this time. Why not?
Well, first of all, there's a lot of liquidation going on to raise cash because of what's happening elsewhere. And people have big profits in the metals. And so the response, of course, was to just get out. Let's take profits. We need this money. That's number one. Number two is, and we talked about this too, as a flight to safety, the issue with gold, silver, and copper is you can't eat it. You can't eat it. So right now, what's happening with the talk about fertilizer and shortage, we're starting to see a lot of the food commodities rise. And we talked about DBA. My God, we told people exactly where to get into DBA.
Yeah.
At 26, it's now close to 27. We talked about sugar. Sugar to me is the most interesting because sugar not only is partly used obviously for energy, and we know that, and I know you hate that subject, so we don't even need to go there. But more importantly, and this I have the sole voice on for years, is that it is the greatest barometer of social unrest. When things get really bad, people do two things. Number one is they reach for cheaper type of food, which is loaded with sugar, number one. And number two is they reach for sugar because it's comforting. Comfort food. And people fight over sugar in certain countries when there's 1 pound left on the shelves, and that has happened. So to me right now, I think if you really want to gauge the appetite for risk, you look at sugar. And now at over 15, we've talked about it, it had to clear 14.14. It did easily. It had to clear 14.50. It did easily. Now it's trading at about 15.40, and it just broke out of a massive base. So I don't even think it's too late to be looking at the sugar. Obviously, again, you want to keep somewhat of a risk parameter in there. So, DBA, wheat, actually soybeans sold off. So I wouldn't worry about soybeans. And that's because China and the United States are now having issues and they were going to be a big buyer of soybeans. But wheat looks like it's ready to go higher. Corn looks like it's ready to go higher. I was even starting to look at some of the other commodities like cotton. I haven't looked at cotton in like forever. But we don't.
On the corn trade though, is it just a seasonal thing, or is it because corn is? I mean, you could get 12 ears of corn pretty cheap in the United States. I mean, what's the call on corn?
Well, first of all, there's fertilizer, right? You
Mm,
need fertilizer, so that's
good
part,
point.
right? Secondly, farmers are getting really pinched and squeezed here. So obviously there's corporate farming to a degree, but the other thing, of course, would be supply chain. And so if I'm looking at the corn chart right now, and again, we told people exactly where to buy corn. It looks like it's consolidating, and if it can get over 470, whatever the reason is, to me that looks like it's going higher too. So there's a lot of stuff outside the volatile oil market, but the most important thing about all of that is the impact of the oil market, that domino effect that's happening. So let's go back to metals. I actually was looking for $70 in silver as a buy opportunity, right? And so we kind of went below that today and we're sort of trading around it. I don't like to buy the falling knife, but I would be willing to say that if today's low, which I think was at around $67, is the
Mhm.
low, and we hold 70, and let's say tomorrow at the end of the week, especially with things potentially escalating over the weekend, I might be willing to get back into silver. And same thing about gold. 4,500 was way below where I was thinking, but 4,600 was an area that broke out from. So if we can go back over there, I might be willing to get back into gold. Copper has a dual side to it because of economic. Dr. Copper, what it indicates here is a potential, the recession call that we've also been talking about. So that's kind of my broad feeling about commodities in general is right now, you still have the ability to look at all of these food commodities. Natural gas, by the way, still, I think, cheap. It got back over 320. It's been fluctuating around there, but to me, I think natural gas is a huge base that's happening here. And I think that's going to play catch up. I don't care how much natural gas there is with oil going up again. Solar looked like it was going to play a catch up, but now that's been selling off because it's expensive. There's no incentives. So you got to look at everything. This is what the dots, it's not a crystal ball, it's the dots. You look at the dots, Todd. And
Okay.
right? And so as soon as oil starts to come down, even if we don't see a headline right away, you want to then start locking in your profits and things that are the domino effect. And even if it means there's going to be a month or two before we work everything out, we know the market's always ahead of that, right? And I
Hmm.
remind people enough that commodities are not equities, they're emotional. You're not buying a stock, you are buying something that is a supply demand, emotional, speculative, 98% speculative instrument. So you have to act accordingly.
That's right. And you have to act quickly and you have to be in front of a screen or deal with a professional and hear great advice like we're getting today from Mish. Mish, let's turn the page quickly on this. Yesterday was the Fed decision meeting. We had Chairman Powell gave his press conference yesterday afternoon, very spicy press conference. And now you have this feeling that there is absolutely no chance we're going to have another rate cut in 2026. As a matter of fact, we're looking not until summer of 2027 till the next rate cut. Are commodities traders, is this an issue, especially on that metals trade you were speaking of? Is there an adjustment that commodities traders need to think of now that we're likely not going to have rate cuts?
I think doing nothing was as good as doing a rate cut because
Interesting.
because it's so they don't even have to cut rates here. If they just keep the status quo, and I believe that they're going to for a while. I mean, maybe we get into a Volcker 1980 moment, but we kind of already been there, done that with gold and silver rallying up where they did, and there was nothing about the Fed on that. And I'm sure they're looking at this as somewhat of a temporary situation with the war. I don't think that they think that it's going to expand. So what are they looking at? The labor market. They're looking at the housing market. Yeah, PCE and CPI, of course, they were lagging indicators, were up a little bit, and we could see them going much higher over time. But I think if you're the Fed, this is exactly what I saw yesterday. They're worried about the economy. So they're not necessarily going to raise. If they raise into these higher inflations, think of oil as a tax on Americans. That's what it is. It's a tax. I mean, not just on Americans, on everyone. It's a tax. And so if the taxes are going up, essentially, and we have interest rates now at a point where housing market's going down, and now businesses won't be able to borrow. And of course, our debt, let's talk about that at 39 trillion. Paying back that debt at high interest rates is also really bad. And what are they going to do? Just say the hell with the debt?
Mhm.
I actually think that doing nothing was their way of saying, we're not going to lower, we're not going to raise. We are just going to sit there like, deer in a headlight, basically, is what they look like right now, and see what unfolds. That to me is bullish for bonds and
Yeah.
possibly bullish for gold and silver again. This is why I'm saying I think this could be a really good buy opportunity down here. I'm just being a little bit more patient. There's no need to rush in because if this is going to go back up, we got a lot of room to the upside.
You are right. The PPI number that came out yesterday before the Fed decision showed us that we had wholesale inflation at 4% year over year. So the highest it's been in a year. And that did not take into account higher oil, which we will start seeing in the next couple of numbers. I'm kind of I guess I don't want to call it the secret society of Wall Street, but there is this belief though that just by saying, oh, it's a one off event, as Chairman Powell likes to point out, it kind of diminishes the fact that this war has been going on for a couple weeks, 3 weeks now, and we thought it was going to end in what, 48, 72 hours. So here, this continues to prolong and it's causing more and more problems. So you have to wonder about supply chain shocks, oil shocks, obviously, LNG, a lot of variables out there right now that are not going to quickly turn to the positive. So this could continue on for some time. Let's get back real quick though. I want to get your thought on the oil side. Is there a specific signal? Is there something specific that you will focus on that will give you the belief that yes, oil will start going down again?
Well, this is a critical area right here with $100. If we get through the weekend and nothing horrible more happens, and then, of course, the headlines are just fast and furious, so you don't know. I mean, the latest one that I saw, I try not to read them too much, but the latest one I saw was that we're just going to take over Carg Island, right? That's not going to go over well by any means.
No, not at all.
I'd say if we can't get through 100 and we open up Monday and we're not through 100 and we start to see a breakdown around 95, I might take that as an early sign to at least lock in profit and maybe not be so much of a buyer. But I want to finish my bonds talk, because what we talked about with bonds was the flight to safety. And when I was interviewed by Kitco March 4th, I look back at the date. So today's what, the 19th.
Yes.
So two and a half weeks ago, before all of this went down, by the way, what was happening here was that I was already talking about bonds as a safety play, potentially because gold and silver didn't look so safe at these levels. At that point, silver was at, $80, $90 an ounce, and gold was at close to 5,200, and bonds were holding. Well, now we had the Fed decision. So what's happening with bonds today? We're actually seeing the yields come down, not because so much we're expecting the Fed to lower, but we're expecting them not to do anything. But more importantly, if we're expecting a recession, they could be, after 4 years of out of favor, the new flight to safety. So I want people to keep an eye on that. If you look at the TLT, it's trading at around 87.30, I think last I looked, and 88 area is where you have the 50 and the 200-day moving average. If we can get back through there, and especially if we close this month, March, over 90, remember that 23-month, the 2-year business cycle goes from contraction to start of expansion. That's bullish for bonds, not so good for everything else.
Mish, if you had to put on one trade today based on everything that is happening, what is it?
What a great question. I might look at sugar, right? You can do it through cane. I might look at wheat, because I think that's also at an interesting consolidation. And I also would look at bonds. I would look at those TLTs. Maybe I wouldn't necessarily, I mean, if you got in now, let's put it this way. Let's just say, oh, Mish, I don't want to wait for 88. I want to get in right now. I like what she says. I'm going to just jump in, because people do that. They don't necessarily listen to my levels. They just go, oh, Mish is bullish bonds. So you have a great stop, right? Let's say you got in now. The bonds have basically stopped at 86.50, looking at the TLT chart, several times. That gives you a really good floor. So we actually personally have our stop at 86.43. Breaks down under 86.50, I'm gone. We'll look at it again. So that's your wall, 86, or I should say your floor, 86.50, and then your ceiling to clear is 88. So that's, if you wanted to not wait, that would be how I would look at it.
Okay. Do you think that we are on the verge of a commodities breakout, or is this the geopolitical peak? I keep using the word peak because nobody else is using it. So I'm trying to find a finality, where we're at that. We're at the top, we're at the summit. Let's get this thing finished up here. So what do you think?
I use three indicators I call my trifecta of inflation. Gold silver ratio, right? So right now we saw that ratio go back up, which I also mentioned several times, that if the ratio clears up back over 64, It favors gold, but not necessarily bullish for either metal. So I would want to see that ratio come back down. In other words, I'd want to see gold and silver like this was the bottom today and proving that to me. Number two of my trifecta is the dollar. Well, everybody so thinks the dollar is going to run, run, run. Basically, it really couldn't get through that 101. We've been in the range between 97 and 101. So now we're back down under 100. We break down under 97. That's the second trifecta of inflation. And now we've already seen the third one trigger, which is sugar. Because I think I'm telling you, sugar really measures inflation. I was on the floor in the commodities exchange when sugar exploded, gold exploded, silver exploded. And that's where I really formulated this whole trifecta because I could watch it unfold. So that's going to be my answer to the question. We're not in a hyperinflationary environment yet. Could we get there? Watch those three signs.
Okay, I love it. Closing out the show, let's talk about the economic modern family. Give the audience an update.
Well, let's just talk about where they are in the chart because that's also so interesting. I looked at the weekly chart. So granny retail, consumer, is broken down under the 50-week and is not looking very pretty right here. But sister semiconductors, our tech space, our whole chip technology, which we need in order to keep this economy in line, is well above the 50-week. So we're going to have a battle between sister semis and granny retail. And we have to see who wins. If sister semis can hold up here, or SMH, the semiconductor space, Micron reported great, if we can hold up here, then I think that will bring confidence not only back to the market, but even to the retail sector. People will say, oh, okay, maybe it's, maybe things aren't so bad and this was an overreaction. However, if we start to continue to see a meltdown in another member of my modern family, which is the regional banks because of private credit, which is sitting KRE right on the 50-week, if that breaks down and granny can't get a bid, sister semiconductors is going to have to come down. The bigger they are, the harder they fall. And that's how I'm looking at the modern family. I know you were mentioning the animation, but I think it's important for people to understand that these animations just don't come from the air. They're based on the relationships of the family. Now, I took a little bit of a pause on new content because we're getting some pitches out for our youth financial literacy. But we will be starting our avatar again and our animations in the coming weeks. So go back to the YouTube channel and check it out.
Outstanding. And you are right. It's not a cartoon. It's very educational. And there's actually a methodology behind the characters themselves. So it's not just interesting. It makes you think. And obviously entertaining as well. So I know everybody loves it. Mish, this was fantastic. I know you have to get going here. You're very busy these days. Plus, it's the start of March Madness. I'm sure there's plenty of basketball you want to watch. So I appreciate you taking the time to reappear on your show today.
Well, unfortunately, the Albuquerque, the New Mexico team, the University of New Mexico team, the Wolverine? No, that's the football.
No, the Lobos.
The Lobos, right.
Yeah.
I knew there was Wolf in there somewhere. Yeah, the Lobos. Are they in March Madness this year? Do you know?
I don't believe they are, no.
Oh, last year, they have been in the last few years and they get eliminated in the first round.
Yes. Yes. Well, Albuquerque, New Mexico, obviously the site of the Final Four, the national championship with NC State and the University of Houston in 1983. So there's a lot of history there in your backyard, but I know we'll have plenty more to talk about going into it next week. So, Mish, thank you so much for the audience. We are broadcasting this live, obviously on BTT, but also on the Biz Talk Today TV channel on YouTube, something that we're doing a little bit different right now. And we appreciate you joining us today. And we do hope you click subscribe to this channel. And also, while you're at it, make a click for the Economic Modern Family channel on YouTube. You will want to click there and keep up to date with everything that Mish has going on. So next week, next episode is next Thursday, 12 noon. So much to talk about next week, Mish. We are closing out the month of March. We have to get everyone ready for April. There's a lot going on, obviously, not just in the world, but also on Wall Street. And we'll have you covered then. So 12 o'clock live next week, next Thursday, Eastern Time. Be there. Until then, take care.
Could you hear me? Because I totally forgot to put my mic on.